Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on today? We got the stock market in rally mode. The Dow is up about 400. The Nasdaq's up about 300. The rally that we had in July, we jumped up about 10% in July. Now we're in August, and it looks like it wants to continue higher. Will it do another 10% in August? My guess is no. But you never know, right? So what happened? Okay, well, we're right up on the SPY. I follow the SPY like a hawk, right? All right, so it has to get to 415 is where its last high was. So if it can go above that, it would be a higher high. Right now, we're sitting right at 415. So right now, we've got a double high, but they'll probably push it through to a higher high, but it's really a tug of war still. Now, this tug of war, let's say they pull it up and we get that higher high. Well, that's fine. That's good, right? Okay, and eventually we're not going to go straight up. I'm telling you, nothing goes straight up. You get higher highs, and now if we can come down and make a higher low, that's the big question. Will we make a higher low? I think that, well, if we get the higher high, I do have a feeling that the recent low back in June will hold and we'll get a higher low. That's all part of the bottoming process. Now, when we make the bottom, then they can push the market up. I'm actually one of the few that believe that they're going to push the market up to new all-time highs. I believe they will. I believe they'll push it up. Now, do I think a crash is coming? Absolutely. You're going to see the biggest crash of your lifetime. But they're going to push it up one more time. They're going to push it up right to record highs again. That's my take on the market. Your take may be different than that. But right now, how far down will we come? Will the market come in and make a higher low, or will it even go lower low? That's a question. I think the low will hold. That's why I'm looking for a higher low. But we have a lot of gaps below where we are now. A lot of gaps come down, like we gap up, we come back down, and we're going to fill those gaps. Now, are we going to fill them all? Probably not, but we're probably going to fill, let's say there's 3 gaps right now. You can look at a chart and see where the gaps ups are. So I think they're going to come back and probably fill 2 of those, and that's where I'll be buying the market to go long. Okay, that's what I got in the stock market. But there's one thing I want to talk about before I get onto the real estate market. Now, this I just find fascinating. I don't even know how to describe this, but apparently Congress, they took a vote not to vote to see if they're going to self-regulate themselves with insider trading amongst themselves. I don't know if that made sense to you, but in other words, Nancy Pelosi will be able to continue to do her inside trading and make millions of dollars. Well, and it's not just Nancy. I'm not picking on her alone. A lot of Congress people, they get access to inside information. For example, this last chip bill that just passed, $50 billion going to chip companies. Well, they jump that trade. They get in. They know which companies are going to get the money, and they buy stock in those chip companies so that it can go up. That's insider trading. They got insider information. They have information before it's released to me and you. Now, the Federal Reserve does this too. I mean, Jerome Powell, the chairman, he got caught red-handed with insider trading. His reply was, "That's very unfortunate." Yeah, I think it is unfortunate. But what did we do? Well, we rewarded him with a second term. That's what we do. These people are above the law. They can do insider trading as much as they want. They just voted not to vote to decide if they should regulate themselves. Oh, you just can't make this stuff up. All right, let's go on to the real estate market. Nobody wants to hear about how your politicians and leaders are stealing millions of dollars from us. That's not exciting. Real estate it's exciting. Let's get into it. All right, so we got defaults, right? We have foreclosures. This is where a lot of the inventory is coming from. Now, you can read headlines like foreclosures are up 700% from where they were last year. Well, of course they're up 700%. Last year, you couldn't foreclose on houses, so maybe they only did 5 foreclosures, and we did 35. That'd be up all 700%, right? Anyways, it's not that big of an issue with year over year. But here is one thing that's exciting. That's interesting, not too exciting actually. In the last month, loan defaults have tripled. In the last month, they've tripled. Now, why? Why have they tripled? Well, here's the problem, right? A lot of times people were using their house like an ATM machine. Okay, so they would use their house as an ATM and they would keep refinancing and taking money out. Well, that game's changed. When it went from 3% to 6%, they can't take the money out anymore. So a lot of people are starting to default on loans. Look, housing has never been more expensive. To own a house. It's never been more expensive to be a homeowner. Homeowners have a lot of costs. They have property taxes. Property taxes just go like that, right? I mean, they keep going up. They don't go down. Okay, how's your homeowner's insurance? Did that go down? No, it keeps going up, right? Keeps going up. Now, inflation, it's at a 40-year high. How much does it cost you to heat your house? How much does it cost to cool it in the summer? Is that going up or down? It's going up. It's never been more expensive to be a homeowner. Now, the homeowner has always been the American dream, but it's kind of turning into the American nightmare. A lot of people are not going to be able to hold on to their homes. And this is what's happening. Loan defaults have tripled just in the last month. Tripled. Now, we know that there's 1.7 million people that are late on their mortgage already. 1.7 million are not paying. They're over 30 days late on their mortgage payment. Many of them are over 90 days late. Okay, so we know about them, and we know about there's still 4 or 5 million in forbearance programs. So that puts roughly 6 million, maybe 7 million people at risk of being foreclosed upon. This is where a lot of the inventory is going to be coming from. Now, people say, well, but Mike, you don't understand. It's different this time. Well, I don't think so. And let me give you some facts here. Okay. Now, what used to be normal, now I'm an old guy, I get that, I go back, I've got a little bit of experience, but it used to be normal. You would pay about, 3 times for a house what your household income was. So let's say your household income was $80,000, right? Okay, you made $80,000, you could buy a house worth about $240,000, about 3 times your household income. That used to be the normal rate, right? Well, where are we at right now? We're at about 9 times. 9 times. So if you make $80,000 as household income right now, you could buy a $720,000 house. Now, okay, so we're at 9 times. This is at a record, right? In 2008, right before the crash of the subprime, it was about 8 times. 8 times your household income to buy, to tell you how much house you could buy. Now, in my area, I'm telling you, I believe we're way over 10 times. I mean, we got homes selling for $2 million, and, maybe the guy works at Apple making $250,000 or $200,000. That'd be 10 times, 10x. But my point is, we're at 9 times right now. Normal's 3 times. Now, people will tell me, but Mike, it's different this time. People like to pay 9 and 10 times their household income for the house. It's different this time. Mike, if they don't have enough money to pay their mortgage, they'll just trade Bitcoin or some other cryptocurrency and make up the extra money. It's different this time. Mike, you don't understand. Look, I understand. It's not different this time. Your area is not different this time. If you're in an area that's paying 9 times household income to buy a house, that is too high, and it will come down. It will revert back to the mean. Normal's about 3 times. So if you're at 9 times, houses have to come down about 66%. Now, I'm only calling for a 50% crash, and I know people will tell you, you're crazy, you're insane. Look, it could be 60 or 70% crash, but I think that we will see a 50% crash. And that doesn't really do much, right? That just basically puts us back to before the pandemic, before where the pandemic was. That's all it does. It brings us back to those levels. Look, we're in a bubble. We're in a bubble. There's no doubt. And that 9 times being a record, 9 times household income is how much homes they're buying. Look it, that is a bubble. That's a bubble. And all bubbles pop. This bubble's going to pop also. It's already starting to pop. You're already seeing it in many areas. Now, of course, not your area, but in a lot of areas, house prices are starting to come down. They're not getting the multiple offers. They're getting, well, a lot of houses that are being bought, they fall out of escrow and they have to come back onto the marketplace again. It's not different this time. Things are shifting and the shift has started. Now, it's just getting started. When people, here's the other thing. Now, I say use the word crash, and maybe crash is wrong. It's 50% off a crash. Well, I guess if it happens quick enough. Now, that's what people say. And houses don't crash. It takes time to play out. And I agree with that. It does take time to play out. Look, in 2008 is where the top was, right? In the subprime crisis. We didn't bottom out till 2012. So it took 4 years. Took 4 years to play out. But I would still say it was a crash. It crashed 34%. Now, this time, I believe the crash will be 50%. Now, 50%. Now, let's say we hit the top back in January. All right. It's going to take a couple of years to play out. Now, do I think it's going to take 4 years? It could, but I think it's going to happen quicker this time. I think the crash will happen quicker because we went up quicker this time, right? Okay, so I think 2 years from last January, so we go out till 2023, January 2024, there's going to be some really good opportunities. Now, a lot of you go, I don't want to wait that long. I want to buy a house now. Well, you can. Just know that you're going to be getting, you're still going to be getting a market that's going down. Now, once again, just my opinion. I'm not always right. I get a lot of stuff wrong. Just read the comments. People will tell you how much I get wrong. And I agree with them. I'm not always right. This is just my opinion. Do your own research. Come to your own conclusion. Anyways, that's all I wanted to talk about today. If you like this stuff, give me the thumbs up. Why not? It's Wednesday. Get out there, everybody. Have a great Wednesday. Bye-bye now.